Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well, situation is becoming more intriguing here, especially on the intraday charts. Well, on the daily time frame, in fact, I do not see any new valuable add-ons that we could add to our yesterday's analysis. So we see that just the motion to the downside becomes slower. As you can see, market is showing smaller candles, right, and continue gradual move right to the first area of support that I hope will be the major support for potential reversal to the upside. We'll see, but anyway, that's the level where we have to watch for potential reversal patterns on the intraday charts and should try to use it for long entry. If, of course, we will not see any moments that will be unwelcome for long entry. I mean long-term downward candles, fast acceleration to the downside, or something of that sort. So that is the level 132.40, 132.20 area, as we said yesterday. So let's turn to the intraday charts. On the 4-hour time frame, what do we see? We see some small pullback to the upside that has happened yesterday, and market has increased the volatility, the choppiness in this area. So you can see candles with the long tails. That was, and take a look at that. All recent price action, 4 candles stand inside of the range of the 1 candle. It's right here. So that's some sort of the consolidation. The single add-on that we could make here is the extension of that retracement to the upside. It's 161 extension. Coincides with the target of our double ripple pattern. Another sort of scenario that we could get, maybe this ABCD pattern, A, B, C top, D pattern. But personally, I do not like such sort of the patterns. I'm not the big fan of it, because I prefer to see a bit deeper retracement with this BC leg, somewhere about the 50%, or perfectly if it will be the 618 retracement, to call it as the ABCD pattern. Still, formally and theoretically, that is ABCD. Since market has hit the 3.8 retracement of that swing, we could call it like that. So that is a bit extended scenario that if this market will not hold, in this case we could turn to analyzing of that ABCD pattern to the downside. Trend still holds bearish on the 4-hour time frame. The most interesting and important for us currently is analysis of the hourly time frame. What we see here? So here you could treat the current situation differently. Some of you maybe will see here some sort of the diamond pattern. As you can see, if you will build the parallel lines here and here, you will probably could try to call it as the diamond pattern. But my thought here is there are some sort of, if you could call it as nuances, that not very typical for the diamond patterns. First of all, diamond patterns as the head and shoulders patterns usually form after solid moves, solid trends. But here, that the nature of this price action is just a retracement. The second moment is that for forming of the diamond pattern, rather more time is needed. So this is relatively tight price action in terms of time to call it as the diamond pattern. And finally, the diamond patterns are quite rare. So personally, I do not want to count on it that this will be the diamond. Besides, I see some signs that currently a bit confuse me from the diamond pattern point of view, because diamond pattern is solid reversal pattern, and this recent price action to the downside is not quite logical. In general, there are a lot of different moments that points on the potential continuation. For instance, take a look at the ABCD pattern that we have discussed yesterday. A, B, C top. Market accelerates right to the 127 extension. So it probably has hit the 100% extension, shallow retracement 127. So you can see the manner how it has reached. Pullback, returns right back hitting the target, and not the reversal, but the choppy and sloppy price action inside of the range of this strong downward candle. That is some sort of the consolidation. So since ABCD pattern has been completed with the 127 extension, it's logical to expect the reversal, because daily trend is bullish. We need some pullback retracement and need some continuation to the upside. It's suggested by the trend on the daily time frame, but we do not see it yet. That is just sideways action inside of the range of this bar, some sort of the pause in price action and some sort of the indecision. So if market doesn't want to continue move to the upside of the reversal, then probably it will try to make the next step to the downside, and I can't exclude that, because the 1618 is logical to suggest that the next destination could be probably the 1618 extension that stands around 132.20, 132.30 area that we have discussed yesterday as well. Another moment that points on the potential downward continuation is this price action in relation with the MACD predictor. So what we see here, trend has turned bullish right here, holds bullish, but the price action doesn't create the new highs, high highs and high lows, so just stand flat. That suggests that probably some sort of the bearish dynamic pressure, hidden power of the bears exists currently on the market. So that's also makes me worry about the potential reversal right from this area. Also we have another moment. Let's take a look at another hourly chart. It's right here. Here we have the possibility for appearing of the butterfly buy pattern that will give us the target. It's 132.20. As we said on the 4-hour time frame, it coincides with the target of the double repo. If this will be really the case, that will be absolutely perfect. If this will happen indeed with this butterfly, then we will try to use it to enter on the long side of the market. So I don't know how you guys, but personally I probably think that it's more probable that move down will continue to the target of the double report, to the level around 132.20, 132.40 area. It's right here. If this will not happen, and if market indeed will start thrusting move to the upside, well, in this case we probably will try to enter long, drop our time frame to the 15-minute chart, to the 30-minute chart. We'll try to enter long at the first retracement that we will get after the thrusting move to the upside will start. So that is the solution of this potential situation, because currently I do not see any significant patterns that could suggest significant upward continuation or something. No reversal pattern, only some blue hint on maybe diamond pattern, something like that. But as I said, I have a big suspicions about this pattern currently, because I see a lot of different other moments that do not give me absolute confidence with this, with the thought that retracement will start precisely from that area. So my choice is to wait, and I feel that probably market still will try to make another leg down before the real reversal will start.